Earnings season has kicked off with a bang as the big banks enjoy an enviable position where they have high margins with interest rates elevated. They see a strong US economy and positive deal making and trading environments. Nonetheless, we're seeing that focus shift a little bit in the second week of earnings season, and it's going to broaden the spectrum of companies in view. The financials still are maintained with the likes of American Express reporting on Friday, but we also see Netflix providing the first of the so-called tech names, it coming into focus. And we see the likes of General Electric Aerospace, which for me is more interesting than the likes of Procter & Gamble and Johnson & Johnson, both big names reporting. But I'm going to focus on those three as we get into three of the top earnings to watch for the week ahead. So let's look at the rundown of the companies that are reporting. Some of the top companies, like I said, headed up by the likes of Procter & Gamble, Netflix, Johnson & Johnson, and American Express. And like I said, we've got the likes of Procter & Gamble, Johnson & Johnson. Both haven't necessarily been performing all that well. It's not necessarily the sort of chart I really wanted to bring up for you guys. So I'm taking a look instead a little bit further down. GE Aerospace, and that focus on sort of manufacturing as Donald Trump comes into office. But we're going to start off with Netflix. Of course, they've been having a great time of it of late, and you can see that with the quarterly breakdown here, outperforming time and time again on both earnings and revenues. And when it comes to the year-on-year performance, they are expected to see rampant growth in 2024 into 2025 and beyond when it comes to earnings. Some of that down to the crackdown on password sharing and account sharing, but also just a general feeling that Netflix is the place to be within a market that actually, to some extent, benefits a relative sort of monopolistic environment where they really just gain such a huge amount of content and offer it. And people don't want to have to sign up for too many of these services, quite frankly. If there's one company that does it well, then people just want to sign up for them. And Netflix have been doing that, trying to get into some of the different areas, including sort of live streaming and things like that. But certainly a great company and one that has been performing very well over the years. If we're looking at the chart here, you can see that we've been pulling back a little bit of late, certainly, but that doesn't necessarily mean that all is over. If we're looking from a wider perspective on the monthly time frame, you can see that this recent pullback appears to be a mere blip set within an uptrend that has been really impressive following that post sort of COVID initial sell-off that we saw. So that points towards this pullback as being a potential buying opportunity for this stock. We're coming back towards the 200-week SMA, also the 20-week SMA, and we're starting to see the bulls coming back into play a little bit here. Whether this pop is going to last remains to be seen, but certainly it shows that this is highly sort of reflective of the current sentiment seen within markets around the possible sort of inflationary move, which might lead to less rate cuts from the Federal Reserve. If we were to see inflation kept under control, you would expect to see this as a potential opportunity for this stock. But certainly we're not necessarily out of the woods, and you can see it on the sort of short-term perspective here. You'd say probably, if we're looking at your first port of call to say that this sort of sell-off is over, it'd be 886. But we've seen this gap lower and then a rebound that we're seeing take shape at the moment. But certainly from a long-term perspective, it does point towards this stock likely being bought up before too long. But the earnings will be absolutely key as we look out for key metrics such as subscriber growth and alike. Next up, let's look at the likes of GE Aerospace. Now, this is interesting because, of course, we've got this focus on your sort of traditional industries in the US under Donald Trump, so that could be beneficial. We've also got the fact that the sort of global travel trend has been upwards. I would say that, airlines appear to be doing relatively well. Global travel appears to be relatively strong, and that benefits GE Aerospace. At the same time, we've got question marks about sort of just defense spending. And of course, whilst you're saying, well, it looks like the Israeli-Gaza thing could be coming to a close for the time being, and Donald Trump may strike a deal with Russia, that could provide the basis for sort of weakness for this stock. And then on the flip side of it, you could be saying, well, actually, there's a push for NATO members to be spending much more, a higher percentage of their GDP on defense spending, which provides a baseline level for companies that are in that area to do well. In terms of the company itself, you can see that it's been sort of a bit hit and miss when it comes to the revenue side of things over recent quarters, but big outperformance when it comes to earnings per share on a quarterly basis. The long-term perspective points towards a massive ramp up in growth this year, the sort of breakout year when it comes to earnings, despite the fact that we're seeing sort of lower revenues, and then continue to push up in the years ahead. And certainly this company has been benefiting, like I'm saying, I could point towards Johnson & Johnson, Procter & Gamble, but their charts weren't particularly inspiring, quite frankly. Whereas when you're looking at this chart, it's a really great chart. You can see here that this weekly time frame shows that big outperformance, that steady climbing. And now we've seen the volatility really kick in with the sharp pullback taking place into the 76.4 Fibonacci. And now the bulls are back into play for this week. And you can see we've really been seeing a nice move towards the upside. A break up through your swing high that we'd say is, safest one would be 187. The sort of risky one would be 185. Break up through this resistance zone points towards the sell-off being over. Alternately, you could rally into this area, pull back and look for retracement entries, things like that. But certainly this current ABC style pullback looks to be likely the end of the sell-off with a move into the 76.4 Fibonacci. Of course, key to it will be how the earnings are looking at the end of the day, but keeping a close eye out for their outlook going forward with Donald Trump coming into power once again on Monday. We have the inauguration. And then finally, we've got American Express. We've come off the back of a week that's been dominated by the big banks and major outperformance, really managing to take advantage of those elevated rates from the Federal Reserve and the wider margins that they're afforded when we see high interest rates. And there's also a perception that the US economy is strong and that travel is strong. So all of this really plays into the hands of American Express going forward. You can see here in terms of the quarterly performance, earnings per share has been strong over the past 3 quarters of 2024. Things are a little bit more changeable when it comes to the revenue side of things. In terms of the annual projection, there is an expectation that we continue to grow for this year just gone, but then into the years in the future. So really, this is a play on spending habits. This is a play on the direction of travel for travel. And so, this is a company that I do like. We can see that markets have been liking it too. You can see in terms of the chart, the weekly time frame just shows it keeps going up and up and up. And on the daily time frame, we can see this nice breakout taking shape around that US CPI day, where we saw big bank earnings and we saw the US CPI. All of that really provided a relatively heady mix, in particular for a company like this. Now starting to pull back. So whether we come back into your sort of 307, whether we retrace into a deeper retracement, whether it's shallow, I think there's a good chance that as long as we stay above this 291 resistance or support level that we've got here, then the trend and the gravy train continues to roll on for American Express. So a great company and one that I think will continue to take advantage of this environment of relatively high interest rates, strong spending. They also benefited from higher inflation, because when you have higher inflation, people are spending more per transaction. So you're looking at a company that I think is likely to continue to do well, despite, and we're seeing a tiny bit of weakness following this big breakout. But even if we did see a near-term pullback, I'm sure before too long, the bulls come back into play, as they have done time and time again in the past. I hope this has been useful. Good luck for the upcoming trading week. And remember, also check out my week ahead video, where I look into the latest economic data coming out from around the globe.